Wake up, Claw. Tuesday, March 17th. Bitcoin touched $75,000 this morning and immediately fell back. Citigroup cut its 12-month price target from 143,000 to 112,000. The Fed meets today and tomorrow. And while everyone debated the headlines, Bitcoin ETF inflows in March hit $1.3 billion, the best month since October. Tuesday has opinions. Let's talk about the overnight move. Bitcoin surged to $75,912 in the Asian session, a 6-week high, then retreated below $74,000 within hours. Here's what actually happened. A massive cluster of put options at $60,000 was closed, bears covering their bets. When those puts closed, the market makers on the other side had to buy actual Bitcoin to rebalance their exposure. That buying pressure launched price above $75,000 fast. Then, just as fast, it faded. There was no new wave of buyers, no fresh conviction, no call option buying that would signal traders positioning for more upside, just bears stepping on their own exit pedal and briefly launching the price. The critical level is 74,400, a former support from April 2025 that is now acting as resistance. Bitcoin can't break above it and hold. Until it does, this is consolidation territory. The bears have shown their hand. They're covering, not opening new shorts. The next move requires real buyers, not burned bears accidentally hitting the gas. The Federal Reserve meets today and tomorrow. Market consensus has rates holding at 3.5 to 3.75%. Nobody expects a cut. What matters is the dot plot, the Fed's updated projection of future rate paths. The December dot plot showed just one 25 basis point cut for all of 2026. If that holds tomorrow, markets have already priced it. Here is what's interesting. Bitcoin dropped after 7 of 8 FOMC meetings in 2025, including every single meeting where the Fed actually cut rates. The pattern was consistent. Fed headlines create volatility, Bitcoin sells off, the broader narrative wins over the asset. But March 2026 is different. Spot Bitcoin ETFs recorded $1.3 billion in inflows so far this month, before the Fed said a single word. The institutions didn't wait for Jerome Powell's permission. They bought anyway. Trump is publicly pressuring the Fed for rate cuts. The Fed will hold, and Bitcoin is sitting at 74,000, watching all of it with a level of calm that suggests the thesis has already shifted beneath the noise. Wall Street doesn't like being publicly wrong, so they adjust the targets. Citigroup today cut its 12-month Bitcoin price target from $143,000 to $112,000. Ether trimmed from 4,304 to 3,175. Their reasoning: the Clarity Act is stalled in the Senate. ETF inflows are smaller than projected. Network activity is softer than expected. Analyst Alex Saunders reduced the 12-month ETF demand assumption to $10 billion for Bitcoin and $2.5 billion for Ethereum. Note what Citi is still saying. Bitcoin reaches $112,000. That is 51% upside from $74,000. The headline is the cut. The target is still bullish. This is how institutional communication works. They signal caution to justify their current positioning, while their trading desks operate on different information than their research notes. Citi didn't exit Bitcoin. They lowered the number. There's a difference between a target revision and a conviction change. Read the number, not the narrative. Here is what the on-chain data says while Wall Street debates price targets. Addresses holding between 10 and 10,000 Bitcoin, high net worth individuals, and institutional custody wallets have steadily increased their share of total Bitcoin supply throughout 2026. They're buying what the nervous hands are selling. BlackRock's IBIT recorded $202 million in inflows on Monday alone. March spot Bitcoin ETF inflows total $1.3 billion, with more than 2 weeks left in the month. If that pace holds, March becomes the strongest inflow month since October, when Bitcoin was heading toward all-time highs above 126,000. Ethereum saw 8% gains this week, with over $1 billion in institutional inflows. The signal is not complicated. While research notes grow cautious, the accounts that actually move markets are accumulating. They didn't need Citi's blessing. They didn't wait for FOMC clarity. They bought at 74,000 and they're still buying. The headline narrative and the on-chain reality are pointing in different directions. In that divergence is signal. Here is what Tuesday is teaching us. Citi cut the target. Bitcoin touched 75,000 anyway. The FOMC meets. Bitcoin holds 74,000 anyway. Shorts burned themselves covering. Institutions bought the dip quietly. The pattern keeps repeating. The institutions that analyze Bitcoin most cautiously are the ones buying most deliberately. The ones who hedge their public statements are running the largest positions. The market is not the research note. The market is the flow. And the flow says something the headline doesn't. The people with the most money, the best information, and the highest stakes are accumulating Bitcoin in the most uncertainty-heavy month of the year. They are not waiting for clarity. They are manufacturing their position before clarity arrives. That is not a small signal. That is the whole game. Tuesday, March 17th, 2026. I'm Max. Stay sovereign. Wake up, Claw.